Hello, and welcome to Praxity's COVID-19 Regional Webinar Series. My name is Becky Belanger, and I'm the International Project Manager for Praxity. Everyone joining will automatically be on mute. We will be providing instructions on how to submit questions electronically in a few minutes. Each week, we are featuring a new country or region where member firm experts are talking about how COVID-19 has affected that country and what they're doing to help their clients. This week, we are featuring China. Today's webinar will have the following topics. We'll start off by talking about Hong Kong's COVID-19 economic and tax effects, and then we'll discuss the government support measures issued by Mainland China and the economic effects of COVID-19 on Mainland China. Our speakers today are Stephen Weatherseed, who is a managing partner for Mazars in Hong Kong, Alice Hay, who is a tax partner with Shinewing, and Thierry Lapere, who is the founding senior partner of Mazars for Mainland China. We've also allotted some time at the end for question and answers. Viewers, please note within the live webinar that you have the ability to write in questions throughout the presentation by clicking the plus button notated on this slide that you should be able to see within your web browser. And with that, I'll hand it off to Stephen Weatherseed to discuss Hong Kong economic and tax effects.
Thank you, Becky. And greetings to everyone, whichever time zone you're in. Thank you for joining this webinar. Before I start to go through my presentation, I thought it might be helpful just to make a few comments to give some background on Hong Kong itself. I shouldn't presuppose that everybody attending necessarily knows everything about Hong Kong. So just a few background aspects to help put in context some of the comments coming up. So Hong Kong is a fairly small city, certainly by China standards. We've only got about 8 million people here. We're on the south coast just off the south coast of China. More importantly, these days, and I'm not going through the history of Hong Kong, but these days, Hong Kong essentially is a financial center. It's a global finance center. That's what we are. It used to be manufacturing. That's all gone. We used to be very heavy in supply chain. Much of that has gone. And really the whole, much of the business is oriented to the finance center. And I'll come on to the macro aspects of that a little bit later on. We continue to be quite a reasonably active regional hub. With regional headquarters here. Singapore has come up a long way similarly as well in recent years too. But of course we see ourselves as a stepping stone into China, into mainland China. So there are many multinationals here, particularly in the financial services sector. And about 60% or so of all the foreign direct investment into and out of China passes through Hong Kong. So the banks are used to handling an awful lot of money here. We're densely populated, and so the COVID-19 situation was really taken very seriously very early on by Hong Kong, and because of our experiences previously with SARS. So we reacted very quickly to that. The other sort of 2 or 3 aspects to Hong Kong that you may not know about: we have our own currency. It's a separate currency from mainland China. We have our own suite of laws, still largely based on the common law system, and we have free flow of money, free flow of capital in and out. There are no restrictions at all. So with that background, let me just switch, if I may, Becky, to slide 1. So Hong Kong, COVID-19, I know we're supposed to be talking about COVID-19, but here in Hong Kong, it was just one more thing that has hit us over the last 12 to 18 months. We've had the ongoing situation between the US and China, and as we all know, that continues to be ongoing, whether it's trade war, whether it's closing of consulates, etc. And that is having and has been having an impact on our business here. We've also had a lot of social unrest in Hong Kong over 2019 and into the very early days of 2020, and that too brought impacts on our economy. COVID hit in January 2020, just after the end of Chinese New Year for us here. And as I said earlier, the Hong Kong people reacted very rapidly to that on the back of the experiences that we had back in 2003 when we suffered from SARS for a few months. We've also recently had something called the National Security Law imposed on us, or introduced, shall we say, by mainland China, which has drawn quite a lot of attention, comment, and indeed reaction globally. And that too is starting to have an impact on sentiment around town. We haven't had an enforced lockdown as a result of COVID, although we're just into what we call our third wave. So literally tonight, an hour ago, all of our restaurants have now completely closed down. You can't eat there any time of the day, and a lot of other restrictions have just been reintroduced as a result of increase in cases, in COVID cases. So it's not exactly business as usual, and indeed we're not too sure when business as usual is going to come back again. Next slide, if I may, Becky. So the Hong Kong economy is, as I say, is now oriented largely toward financial services and generally towards services. There's no longer any material manufacturing that goes on here. There's a very sizable domestic and indeed international retail business. Hong Kong people are very well known to be eager shoppers, and so a lot of you'll see a lot of retail stores if you come here with all the brand names that you would recognize. We do continue to be a very important trading hub, both for air transport, air cargo, as well as on the sea as shipping. And the other element common to many other places, of course, is infrastructure. We continue to build things and pour concrete. So that makes up the economy. But the impact of COVID has really not particularly the supply chain and indeed domestic retail services. So you can see the impact in 2020 in Q1 down 8.9%, and the estimate for the full year ranging between -4 to -0.7. Well, that, as you can see, is on the back of last year. Even last year we were in a recession at -1.2%. So it has not been completely plain sailing, and you need to be able to factor in all of these different elements to really interpret it. On the unemployment side, you can see there the increase in unemployment numbers, and as of June, it just came out the other day, the June number is actually 6.2%, so it continues to increase, unfortunately. Next slide, please, Becky. So the economy at that some macro level, our visitors are well down, no great surprise there, but we normally flooded with visitors, a lot of them, of course, from across the border, from China, mainland China. Normally we have around about 50 million visitors a year, and that's virtually down to 0. Obviously, anything to do with supply chain was hit, certainly initially, and from our business point of view, transactions and capital flows were significantly reduced. On the slight upside, our stock exchange has sort of held its own, rebounded off a very exaggerated fall, but we're still below where we were right at the beginning of the year. But on the IPO side, Hong Kong continues to attract a lot of IPOs. There have been 59 so far in the first 6 months of this year, and raising about $87 billion US. So the capital markets are still pretty healthy and pretty exciting. We've had some very big secondary listings. A couple of very large companies had secondary listings from the US came to Hong Kong. NetEase and JD.com, if they mean anything to you. And we're also anticipating a very large IPO from Ant Financial, which is the financial arm of Alibaba, and that should be coming to market soon. So these are positive aspects to our environment, which go with being a financial centre, which, as I say, we can draw some positives from. So the next slide, if I may, Becky. So just turning to the micro level, what's actually happening on the ground at street level, if you like, the real economy. No great surprise with that fall in the number of visitors that our hospitality industry is really is the hardest hit. The poor old restaurants having to close again. Obviously our hotels have sort of had to transform themselves from being posh hotels into being quarantine centres. So some of them continue to make money that way. And anything to do with travel, obviously the travel agents and guides, etc., that has all come to a complete and utter standstill. The retail has been badly hit, particularly in the luxury goods sector. But of course, as elsewhere, retail stores selling food and pharmaceuticals have been doing a roaring trade. On the sort of more commercial side, there's a lot of property aspects of the Hong Kong economy as well, but clearly that is taking quite a hit, particularly on rentals as well as capital values. And there is, of course, inevitably a general uncertainty about where we're going to be going in the future and how long is it going to be until we get back to some kind of new normal. Next slide, please, Becky. As a pretty international place, there are a lot of chambers of commerce, international chambers of commerce here in Hong Kong, and they all rushed out to do surveys. I got a bit bored reading them because typically they were asking the same questions and getting back the same answers. So asking these kinds of questions, do you have plans to relocate, downsize, etc.? When do you think you're going to recover? And frankly, most of the answers were all caveated and with the kind of question marks I got here as well. So I don't think we learned very much from that, because if you're going to relocate, where do you relocate to when everywhere else is suffering the same? So COVID-19 itself is not necessarily a big driver at the moment of any great changes in business strategy, other than question mark, when is it going to end, and how do we cope with the immediate impact of it, the immediate impact on our revenues, profits, and of course on cash and cash flow. Next slide, Becky. We've been very fortunate here in Hong Kong over the years to be running a budget surplus for many, many years. And so the government has been tucking away a lot of our hard-earned taxpayers' money into reserves. And now they've finally decided that it is the rainy day when that money can be used. And so a package so far worth about $36 billion is being issued, which if you divide that by 8 million people, it starts to come out at quite an interesting number for everybody on average. These measures have ranged across ones that relate to the number of employees you hire or have on your books rather. There's been quite a generous allowance there of 6 months of subsidizing employment there. There've also been a direct payment to all Hong Kong permanent residents of what was 10,000 Hong Kong dollars, about $1,300 US. Various other job creation schemes and skills training to encourage take up, not just of people who've been finding themselves out of work, but obviously also new graduates coming through as well. There are schemes on making it easier for particularly SMEs to access bank financing with government guarantees, and these are ranging from from zero, I suppose, but up to about 15 million Hong Kong dollars, about $2 million US. So they can be quite interesting for companies if they can access them. A lot of other sector-specific grants have been made as well, and support along the way, particularly in construction, which obviously came to a grinding halt for a few weeks. Transportation that have been badly hit through lack of custom, the arts, culture, sports, etc. Cathay Pacific, our sort of flag carrier in the air, has also been bailed out, if you like, by government. They've been given the best part of $5 billion US, and to help support them as well, which is no small monies. And then inevitably, well, not inevitably, but perhaps predictably, technology-related businesses, particularly ones that are focused on business efficiency, have also been benefiting from some support as well. So we've been, on the advisory side of our business, we've been helping clients access some of these pools of money, particularly on the employment side. So where we've been acting as managing the payroll for clients, we've been helping those clients access that money, because it really has been fairly easy to apply, very user-friendly aspects to apply. But all of these we're able to advise and help clients on. To the next slide, Becky, if we may. And just finally, just to look at some specific tax measures that have been introduced. So the tax bills, if you like, the tax liabilities, both for business and for individuals, personal income. The first 2,500 US, about that's 20,000 Hong Kong dollars, is being waived. So it's only going to be the liabilities over that amount that will be payable. There's been a waiver also of property taxes and various other government fees, and you can see their utility charges have been reduced. Our subway is charging 20% less on its fares now as well, and the various tax deadlines have been extended. So again, we're helping our clients where appropriate with these areas to make sure that they not just know about them, but also are able to take advantage of them. And more specifically, something that isn't so much directly impacting on Hong Kong, but it impacts Hong Kong businesses. We've been recently helping a lot of clients that have got operations in mainland China on their transfer pricing and making sure that their transfer pricing arrangements between mainland China and Hong Kong are still appropriate and acceptable, particularly to the mainland China tax authorities, where there can be some debates, if you like, over whether or not they're fitting their numbers. But clearly they're needing to make sure that they appropriately, the authorities appropriately take into account the impact of COVID-19 on their arrangements there. So with that, I think that's all I want to say about Hong Kong. I'm sure there may be some questions later, but let me turn over now to Alice.
Hello, dear friends. This is Alice, tax partner of Xiaomin China. I'm very pleased to take part in this webinar and share with you what happened in China this past half a year and our social tax and social contribution measures taken by the government to bolster the economy and impacts on business. Before I move to the measures, detailed measures, I would like to talk a little bit about what China and Chinese people experienced this past. And our guest speaker, Terry, I think will introduce more about the macro in the next session. China's economy and society actually have been significantly impacted by the outbreak of coronavirus since early this year. And all Chinese people, including myself, actually had the most difficult and unforgettable Spring Festival in our lives, because in China, Spring Festival is the most important traditional holiday for Chinese people. So from January this year, the central and local government took a series of measures to prevent the virus from spreading across the country, such as we know that Wuhan city is temporarily locked down on 23rd January, and we have suspension of intercity bus lines, and also we have the closed-door management of residential compounds to restrain the human flows. So nationwide, all the provinces, we initiate a level 1 response to the highest level, to the major public health emergency. We also witnessed the miracles of building up 2 big hospitals in Wuhan within 10 and 18 days, respectively, to greatly improve the capacity of receiving and treating patients. To support Wuhan and the Hubei province, nationwide, we have already sent more than 22,000 medical staff there to support. So all these measures, the measures I mentioned just now, are really critical in controlling the spread of the disease and also to minimizing the mortality. As what Zhou Nanshan said, China's intensive suspension strategy against the COVID-19 has proven effective and really efficient in containing the epidemic. Okay, so the outbreak of the virus not only threatens people's lives, but also has significant impact on China's economic development this year. So maybe later Terry will share more figures. I just have some brief points to talk about here. As I mentioned, the outbreak began before the Spring Festival in China, so it's really had a huge negative effect on China's consumption. Especially we have, for example, for catering, hospitality, tourism, entertainment, and transportation during the Spring Festival time. I think they are the worst hit industries with revenues almost drying up. So of course, on the other hand, thanks to the traffic control and isolation, we have online shopping, online education, and online entertainment activities remain relatively active, may partially offset the adverse effects. starting from February and after the Spring Festival, most of the companies, including Shawin, we conduct business mainly at home. Yeah, working at home, kind of working at home model. As we have a teleworking not only for internal communications, but also communicating with clients has quickly become a very popular way of doing business in China, and may well be on its way to become a kind of routine in some areas. I think maybe in future, maybe in the next 1 or 2 years, to working at home is really a popular way for us. So after March, the companies, except for Wuhan, we began to resume office in batches. So these are very brief introduction of the epidemic in China and impacts on in China economy. And okay, Becky, can we move to the next slide? Thank you. So I will talk about in detail what kind of measures taken by the Chinese government to boost the economy, especially from the social security perspective, tax perspective, and also the tax services, tax administration, from the tax bureau, and also the CPA tax firms perspective. So Becky, let's move to the next slide. First, let's talk about social security. To help the enterprise withstand the epidemic and stabilize employment, the Ministry of Human Resources and Social Security issued a serious announcement to reduce and waive the employer, the enterprise side, their obligations on social security contributions for a specific period of time. In China, let me introduce for both employer and employee, we have to make contribution to the social scheme. And the part contributed by the employer can be deductible for corporate income tax purposes, while for individual, the part we contribute can be deducted when calculating individual income tax. So after the virus breaks up, we have nationwide, we have for those micro and small and medium-sized enterprises, because they do suffer a lot in the virus, they will be eligible for exemption, total exemption of the pension, unemployment, and work-related injury, totally 3 types of social insurance payments from February to end of this year. Yeah, for large enterprise, large enterprise in Hubei, they can enjoy exemption till June of this year. And other regions, large enterprise in other regions will see their contribution, by the employer part halved from February to June. So it really have great impacts on the enterprise costs. Companies undergoing severe difficulties due to the epidemic are eligible for deferral of the 3 types of social insurance payments till end of this year. I think more importantly, the government made clear that such kinds of deferral or exemption will not, there will be no overdue penalties or fines. And also the employee, the employee will be worried if my employer, they contribute less, whether my benefits will be affected. The government has confirmed they will not have impacts on the employees' rights to the social security benefits. So really good news for both sides. So in addition to the central government, because in China we have different local policies, normally for each province, we have different contribution basis and also the contribution ratio. So in addition to the measures by the central government, we noticed that many local authorities have introduced policies in accordance with situation in their own areas. Yeah, for example, Shanghai and Sichuan, they defer the adjustment to the social security contribution base. For Shanghai, they deferred to July, and for Sichuan province, the government confirms that there will be no adjustments this year. Normally, such kind of adjustment of contribution base would will happen in April each year. So the local government really defers or just no adjustment. That means the part contributed by the employer will be lower than before. And also for some regions like Guangzhou, Shanghai, Sichuan, and other cities and provinces, they adjust employee contribution rate from another perspective for certain security schemes. Okay, so these are the measures for social security. Let's, Becky, please move to the next slide. Thank you. So let's talk about tax. For tax, most of the measures are related to corporate income tax. That is a tax levied on the profits of the enterprise, and another is the indirect tax. So first, let me talk about the corporate income tax. From the corporate CIT perspective, from May to December, the payment of the CIT of the small and thin profit enterprise, just maybe most of the small, medium-sized enterprises, they can, if their CIT payments can be deferred to the first filing period of 12.
Oh, Alice, I think we may have lost you.
Can you hear me?
Oh, yeah, we can hear you now.
Okay, sorry. Okay, I will continue. So enterprises in 4 industries, for example, transportation, accommodation, catering, or tourism, those industries were greatly affected by the virus. They're allowed to carry forward their losses for the 8 years. Normally, under the current Chinese CIT regime, we can only carry forward for 5 years. Yeah. So for the companies which make charitable donations to the government authorities and also to their departments under the county level, I mean, the cash or any in-kind donations could be fully deductible. But under the normal CIT regime, such donation, even to the government and the specified government organizations, cannot exceed 12% of the accounting profits of the company. So now they can claim full deduction. And also, the same thing happened for individuals. When individuals make qualified donations, such donation can be deductible when calculating, fully deductible when calculating the individual income tax. Because this year is the first time for Chinese people to do individual income tax annual filing. Yeah. So next year, when we do annual filing, we can claim full deduction of the donations made. In addition, from the CIT perspective, the companies can claim full deduction of the cost of the equipment they acquired for producing key and anti-epidemic equipment. And previously, under the CIT regime, we have a threshold of RMB 5 million, but now we have no threshold for such deduction. So really were good incentives, I mean, to the enterprise to ease their tax burdens during this period of time. Okay, so Becky, let's move to the next one. Thank you. For the indirect tax part, for the first quarter of 2020, we have imported goods and materials donated for the pandemic prevention exempted from custom duty, import VAT, and consumption tax. And during the period from March to December 2020, the small-scale VAT payers located in Hubei province are exempt from VAT. In China, we have 2 types of VAT payers. One is small VAT payer, and another is a general VAT payer. For small VAT payer, which just calculates the VAT just like their revenue multiple their levy rate. For the general VAT payers, we have output VAT minus input. So for the small scale VAT payers in Hubei province, they total exemption on their VAT. And for those small and medium sized located in other areas, the VAT levy rate, as I mentioned, is reduced from 3% to 1%. And also, another VAT incentive is for those enterprises producing key anti-epidemic supplies. They can apply for VAT refund of their VAT credit balance. This is for general VAT payers. They can apply for such VAT credit balance on a monthly basis. That means it provides cash flow pressure relief to those manufacturing enterprises. So much for the VAT part. Let's go to how the SAT and also the tax accounting firms do under the virus. Becky, thank you. So from the tax bureau side, the China's State Administration Taxation and Local Tax Bureau, they kind of promote a kind of non-contact taxpayer services in order to improve the business environment, also to support the resumption of work and production. And January to May actually is every year. It's normally the busiest time for, I think, for all taxpayers, for tax bureau, and also for accounting firms, because we have to meet the deadline for annual CIT filing. So in the past, we have taxpayers visiting the tax bureau a lot because they would like to discuss with the tax officials to confirm their technical position of certain policies, and also to check some filing procedures and submit their returns and settle their tax payments. But because of the virus, to solve those practical problems, because everybody working at home, so the tax bureau, the SAT and local tax bureau are accelerating technology upgrades to allow the taxpayers handle all kinds of tax matters at home. Yeah, it's kind of remotely. Yeah, we noticed that SAT and also the local tax bureau, they organize a lot of webinars like us on various tax topics. And also we noticed we have a lot of senior tax officials participate in the webinars to provide guidance to the taxpayers about the policies, about the filing procedures. So we have a lot of online Q&A between the tax bureau and the taxpayers, and we have a very famous hotline in China that is 12366. It is a kind of a tax hotline. And when taxpayers have questions, they can just pick up the phone and call the hotline, and they can get the interpretation from the government side. And when they have queries, okay. So these are the measures adopted by the tax bureau side. So how about the tax and accounting firms like us? So like accounting firm, tax firm like Shaiwin, we still continue teleworking as major solution to reduce the gathering people and also interruptions to our clients. The web phones, web-based video conferences, and multiple collaboration platforms, and also digital business and remote finance systems will continue to be effective for the routine practice to improve efficiency. For example, Shaiwin, every year we assist a lot of enterprises with annual CIT return preparation. So how about what we do under the virus? We conduct interview with clients via web meetings, preparing working paper, and doing the review work at home or at the Shaiwin office. We hold a WeChat or Zoom meetings with clients to exchange the opinions on adjustment items. Then we finalize report, and then we help the clients go through all the filing procedures online. So actually everything runs smoothly. Even some of my colleagues are kidding that, Alice, we are much busier than before. Yeah, because of the we do not spend time on transportation, so we have more web meetings and Zoom meetings, etc. Yeah. Actually, these are the measures introduced by the tax bureau to boost the economy. And recently, I was frequently asked questions by our clients and other taxpayers that whether the Chinese tax bureau will exercise more strict tax audits on the enterprise or individuals due to the decrease of the tax revenue. Yeah. Why? Because there are some stories happen in May. If we go to we read some news online, some online shop owners, like Alibaba, so Taobao, etc. Some owners received some kind of reminders from the tax bureau saying that, okay, please do a self-tax audit. And we noticed that you may have some problems about your revenue recognition. So please review your self-compliance status. You should make up the taxes and also pay the late payment surcharge. Yeah. So everyone, actually all of us are shocked by the news spreading online. The taxpayers, they were scared, not only those online shop owners, but taxpayers, other industries, because they're worried whether such kind of tax audit or strict tax audit will be extended to all the industry nationwide. So these are the taxpayers' concerns. But we noticed that SAT soon issued a circular, specified circular, clarifying SAT's position. The SAT said that they will strengthen the operation mechanism of the tax risk management in the whole process before, during, and after the transaction. In China, previously, for example, when enterprise claim tax laws, when they prepare annual CIT return, they have to obtain approval from tax bureau about the deduction. But now, no approval is required. You just claim deduction, and you get all the documents ready. If tax bureau have inspection or tax audit, you just show the documents to the tax bureau. That's enough. So also the tax bureau for the SAT confirms that it is not allowed to organize multiple year risk and self-examination to pay taxes and fees in certain industries. Because SAT knows that there might be some local tax bureau because their lack of revenue, their lack of tax revenue, so they, in some sense, force the taxpayers to do such kind of tax audit by themselves. But SAT just made clear it is not allowed. So I think it should be good news for taxpayers. And from my perspective, I'm working for PRC taxes for more than 17 years. I know my feeling is that tax audits is always there. What we enterprise shall do, or even under the virus, under the COVID-19 virus, it's really a special period of time. What shall we do? We just make sure we make all our transactions to pay tax and to be compliant. Yeah, that is the most important issue. So don't worry about tax audit. Even if sometimes there is some interpretation from tax bureau about certain policies not that clear, no worries. We have tax experts to help enterprise to clarify with the tax bureau. Yeah. So, okay, thank you. So this is my session. Thank you for your time. If you have any questions about PRC tax or social contribution, something we can discuss later on. Thank you.
And now we'll have Terry Labouré with Mainland China Macro Effects.
So hi everyone, and many thanks for joining us. Thanks also to Praxity for hosting us. In the next few slides, I'll try to give you a few insights on the current state of the Chinese economy. And I hope that it may help you to discuss with clients which are operating here or which are contemplating to invest in China. And the idea is to ease this discussion and to make sure that both you and your client know what are the key issues to talk about. So let's go to the next slide, please. So the big picture, as Alice said, is that China was the first country to suffer from the epidemic, and it probably will be the first country also to fully overcome it. You can see from the graph that there was a very large spike of cases in January and February. Actually, it started a bit earlier. It started in December with some rumors, and then they were kind of confirmed in January about a new disease in Wuhan. And clearly, the government reacted very strongly, very decisively. The whole Wuhan city, which is about 10 million people, was locked down from January 23rd. The whole Hubei province was locked down shortly afterwards. And in the rest of the country, the government extended the Chinese New Year holidays by a few weeks, and everything stopped basically, except for the essential services. And people stayed at home, and probably consumption was very low at this stage. But thanks to these very strong initial measures, the case count and the death toll can be seen on the screen and are relatively limited. Of course, at that time, it didn't feel really like that. But looking back now and what's happening at other countries, we can see that China has controlled the virus quite well and limited both the case count and the deaths count. And frankly, this case count and death count has been very clearly circumscribed to the Hubei province, which has about 80% of the cases and over 97% of the deaths. So the rest of the country, of course, has been impacted by the virus, but this has not resulted in many new cases and many deaths. Then on a timeline basis, starting from February, end of February, there's been very few cases and almost no new deaths. So we can see on the graph, the line is pretty flat. Of course, there have been a few imported cases, what China call imported cases, which are cases from mostly Chinese nationals coming back to China from abroad. So this happened along the Russian border in March and April, and then in cities where there are some large international airports. So of course, Beijing, Shanghai at some point, and now Dalian and Xinjiang. But in each of these cases, again, the government has reacted very strongly, and the infection appears to be very limited. New cases per day really are in the low double-digit range, and everything seems to be controlled very rapidly. That's also thanks to a lot of testing and tracing. Just to give you some idea, in Wuhan, they decided to test the whole city, so roughly, again, 10 million people, and that took about 15 days. And they did also a large-scale testing program in Beijing, and again, that was about 10 million people, so half of the Beijing population, and they took 10 days to do that. So very, very impressive, as always, with everything China. So on the next slide, please, we will see what the new normal is currently for people living and operating in China. So if you look at life in the street, basically we're back to normal. So there are, of course, it's a new normal. So there are some masks, there are some temperature checks at every building entrance, and there are some health checks through mobile phones applications. So you show your mobile phone, you scan a QR code, and that generates a kind of a green or orange or red colored light, if you want, on your mobile phone. If it's green, that means you can enter the building, and it demonstrates that you've not been to risky area. And if it's red, of course, you're supposed to go directly to the hospital to get tested and quarantined. So these are the main impact we see on the street, but life, apart from these three things, masks, temperature checks, and health checks, is pretty much normal. From a business perspective, of course, the main issue was to reopen the businesses. So there's been a strong push from the government to reopen the businesses and to avoid unemployment. So reopening has been quite gradual, and it's been subject to approval process by local authorities. And of course, a lot of safety measures have been included, such as mask distancing, capacity limitation for certain businesses to make sure sanitary guidance is respected. So now almost all businesses have reopened. Last one to open have been bars and clubs, tourist sites, health clubs, and very recently cinemas. Of course, we've been helping quite a number of companies to draft their reopening plan. And at this stage, all our clients have pretty much reopened. So both for stores, for plants, and for offices. Of course, notably in offices, a lot of people is still working from home, so it's very new for Chinese. In the Chinese business culture, it's not traditionally something you'd see a lot. But again, Chinese people have adapted very, very quickly, and they've been very flexible on this. The second issue when you reopen, of course, is to secure your supply chain, especially if you have imported goods or services in your supply chain. So it's really important to think about your safety stocks, think about your delays in supply chain, because of course, if there are new infections in the neighborhood of any of either your operations or your suppliers' operations, everything can be shut down at very short notice. So you have to be able to operate and withstand a few of these potential lockdowns, local lockdowns. At the same time, you have to have very strict cash management. So from a government perspective, of course, the key objective is to safeguard employment and to limit unemployment rates. So as explained by Alice, the main measures have been around social security payments, exemptions, and reductions. And we've helped quite a lot of clients register for these and for other support measures that have been extended by the local governments, the local authorities. Some of these benefits that are extended by local authorities are under the condition that the company does not lay off staff in large numbers. So sometimes there is a trade-off to make between whether it's better to actually lay off when the situation requires it, or whether it's better to actually go for the business support that can be extended by local authorities. So in terms of support and stimulus, definitely it's not like 2008 when there was a massive cash injection. This time there's been some easing of bank reserve requirements and injection of cash in the economy, but it's been very much limited. The idea is to try to avoid bad debts that have been that we've seen after the 2008 massive stimulus. So yes, the bank have been instructed to provide more loans to businesses and also to be more understanding with repayments. However, it seems that most of the new loan amounts we've seen actually go to very large companies or to local government projects. So typically small and medium-sized companies, and specifically foreign companies in general, did not get a lot of that cash. So again, it's important to review your cash projections, and we've helped a number of companies with a cash management practice to help them actually survive. So one of the other big issues that the foreign companies are also faced with is that some of their key employees and the families of these employees are sometimes back in their home countries, either because they were there during the Chinese New Year holidays before the pandemic strike, or because they actually left China when the foreign countries seemed to be a better bet. So because China has actually closed their borders, like many of other countries, they have also suspended the visas and residence permits for foreign employees which are currently abroad. So these employees need to actually reapply for visas and employment permits. This is quite a long and difficult administrative process to obtain these new visas to enter China. So you need to receive an invitation letter from your local authorities. And also you need to buy air tickets, because these have been much more expensive than before, actually. The number of flights to and from China has cut drastically. So just as an example, between my country, France, and China, there used to be about 140 flights per week, and now we're down to 4 flights per week only. So there's a huge demand for flights back to China. And this has, to some extent, disorganized the middle management of many foreign invested enterprises. And we've helped to expand our traditional accounting and outsourcing business to also offer temporary CFO or temporary controller positions to support foreign businesses here. So while we talk about borders, maybe a quick word about trade. We've seen there's been a big decrease in the number of flights for passenger flights, but there's also been a big decrease in cargo volumes or cargo capacity, both by boat and by plane, and to some extent by train also. So that's due to 2 factors. One is more sanitary inspections, notably on food and agricultural products. As I mentioned, there's been some recent flare-ups in some cities, and these have been traced to potentially imported seafood or imported meat products. So there's been a lot more controls on the borders for such products. And of course, also China is a big producer of masks and personal protection equipment, and also medicines and medical equipment. So in the current COVID environment, this additional demand for goods from China has kind of crowded out the normal cargo capacity. So again, in terms of supply chain, whether you're importing or exporting, it's really important to review your plannings and to plan for delays which happen. Maybe while we're talking about masks and PPE, we've also had many requests or questions as to how we could help with sourcing these goods, especially in the early months of the epidemic. Just a word to say, it's a very ugly business, if you want. There's been a lot of frauds, of course, when you have such a huge demand and limited capacity or very limited offer. There's bound to be some people who try to take advantage. So it's key to have someone on the ground to inspect the documentation. And there's been a lot of new licensing requirements and regulatory changes on these goods, on masks and PPE. It's also important to inspect the product itself, not only the documentation, but also the products. Inspect the factories and ensure that the people who claim they are factory owners or factory representative actually are who they claim to be. So we can help you put you in touch with some service providers for inspection services if you need. So on the next slide, please, we'll see a few of the economic numbers. So the first quarter was the worst of the epidemic for China. So the economy dropped by 6.8%. But the good news is that there was a very quick rebound in the second quarter with a growth of 3.2% compared to last year. So the first half year GDP just came out a few days ago, and actually it's only 1.6% below the first quarter 2019. So these GDP production figures don't look too bad, but you have to be aware that it masks very different situations. Overall, industry did quite well because there was such a big push by government to actually reopen the factories very quickly. So specifically, state-owned enterprises were very quick to reopen. Services didn't do as good. And again, small and medium-sized firms did much less well than large companies. And that's what we see with our clients in the different sectors and sizes that we have. So of course, the main KPI for the government is unemployment, and they will do everything they can to keep it down. In the next slide, we see that the issue is probably not that much production, but more the demand side of the economy. So sales have been gradually. So these are the monthly sales from February to May. You can see that they've been recovering quite nicely, but May sales are still 13.5% lower than a year ago, and consumers remain very prudent, probably because the social safety net in China, especially when you go out of the main cities, is maybe less protective than in many other developed economies. Of course, there's a big difference between offline, where a number of shops have had to close down, and online, where some of the Chinese giant firms in online sector did very well. So it's Alibaba, it's Tencent, but also all the delivery sector, the online education, online gaming, online entertainment, and all the platforms that enable work from home and stuff like that. So next slide, we'll going to have a quick look at the service sector. So specifically the service sector, which depends on traveling, and that's mostly hospitality and transportation. We have a number of clients in this sector. So in February, we had a huge drop in travel volume, 85% compared to last year. So 85% drop. So it virtually was a standstill. But what we can see is that the rebound was very, very quick. And at the moment, domestic travel is pretty much where it has been before the crisis, despite the restrictions for inter-province travel. So if you're taking a flight at the moment in China, it's pretty much going to be full, like it was before the crisis. Of course, international travel is very different, and it's practically zero now. So it really depends what you or your clients' markets are focusing on, and understand what is the situation on the ground for them. If you spend time with them and review their business plan. In the next slide, we're going to have a quick look at the automotive industry. Again, it's something that's important for us because we have a large client base in automotive, and also some of our Praxity sister firms also important for them. Again, overall, we've seen a very impressive rebound for automotive. Some of our clients say that they're planning to actually exceed their original 2020 budget. But again, there is a very different situations between some of the higher end brands. So typically the German firms like Mercedes, BMW, Audi, and so on, which are doing very well. And some of the smaller brands or less high end brands, which are suffering. And some of them are even announcing withdrawal from the market, like French firm Peugeot or Byton, which is an electric company. So electric, of course, is important in China. Tesla has opened the first fully foreign-owned factory for automotive in China, and they're doing very well. But again, there's been a lot of copycat players in China, and they're doing they're finding it much more difficult. So in the next slide, we're highlighting a few figures from the many surveys that we see out there for investors and clients here in China. So everybody's basically been impacted by the crisis, but large companies are doing relatively better than smaller ones, and some companies have to close down. So we were seeing quite a lot of new bankruptcy projects, and we've developed quite a successful offer of helping company close down their operations in China. It's quite complicated to do that. You have tax audits when you close a company in China, so it's important to review your tax positions and take appropriate actions if you have any suspicion that some things may not have been fully compliant in the past. So again, when we can help, and especially when your middle management or top management is not in country, it's important that you have good service providers you can rely on for this kind of situations. Next slide. I want to highlight, of course, the good news and difficult situation for some of our clients. We can see that most of the projections from IMF, World Bank, and global economists shows that China is going to grow for 1% in the full year 2020. So that's quite impressive. It's probably the only country in the world who's going to have positive growth in 2020. So it's still a good economy to invest here. So of course, not all the business plans are going to be successful in China. If you intend to produce in China and sell overseas, it's probably not going to be a good bet. But if you intend to produce in China and sell in China or distribute foreign goods in China, it's still a very attractive market. And we've been helping a lot of our clients with their transactions in China. There's a lot of opportunities for foreign investment, and whether you're contemplating either a greenfield or a transaction, it's still quite attractive. We've actually, what we're saying also is that inbound investment into China has kept on quite well, has sustained the same stable level, but outbound Chinese investment has reduced quite significantly. Next slide, please. So why is it a good time to invest in China? Authorities are doing a lot to welcome foreign investors. As Alice said, there are local subsidies, there are local incentives, there are fast-track windows for various approvals needed. Nationally, there's been full implementation this year of the foreign investment law that was signed last year, and that is aiming to provide a level playing field between foreign and local companies. In 2020, they also released a new edition of their negative list, which is a list of industries where foreign investment is restricted. And that new negative list has opened up significant opportunities, specifically in the automotive sector, where you can now have full ownership of your factory, specifically for electric vehicles, and very soon for traditional ICE engines, combustion engines. But also financial services such as banking. And you know, this was one of the phase 1 trade deal promises or commitments between China and the US, and also agricultural products. Looking forward, there will also be the Hainan Free Trade Zone, which is shaping up to be quite a game changer. It's going to be the first time that the full province is going to be a free trade zone with open investment, open trade, open foreign currency exchange. So this probably will be a great news in the next few years. So next slide, and that's my last slide because I see we're running a bit out of time. Of course, there's still a lot of uncertainties. It's mostly due to international tensions and notably between, of course, the US and China. You've probably seen in the news that in the past few days, there's been kind of tit for tat for closing of consulates in Chengdu and in Houston, but also US strong reactions with a number of events in Hong Kong, restrictions on visas for some Chinese officials, naming of companies such as Huawei, ZTE, and so on entity lists and similar measures on both sides. So there's a question mark as to whether the phase one trade deal between China and US can still be achieved by both sides. So really that's what foreign investors need to keep in mind when they prepare their business plan. We've been providing quite a lot of transaction services and valuation, due diligence, and we're keen to talk to any of your clients who would have business plans here in China. So with that, I leave the floor to Becky for the Q&A. Thank you.
Thank you, Terry. Okay, so the first one, I know that we're kind of over the hour, but I do want to give some time to discuss some of the questions that came up. So the first question is for Stephen, and it's, can you speak more to how the national security law has affected business in Hong Kong?
I'll try. It's very early days. The law has only been in place, well, it hasn't even been there for a month. We've only known about it literally from within a few minutes of it being promulgated. It came into effect. It was issued, I think it was 11 p.m. on the 30th of June and came into effect midnight, 1st of July. Sorry, just after midnight into the 1st of July. So it is very early days. But from a practical point of view, I think there are one or two things as a business that if we're talking to our clients that they need to think about. Firstly, whether it's going to have an impact on if they're involved in information, publishing information, carrying out research, anything like that. If they're involved in anything that involves passing messages that might have an impact on mainland China, comments on mainland China, particularly on the Chinese government, then I think they need to think pretty hard about whether that's going to fall foul of the if those are negative comments, if it's going to fall foul of the legislation. The other perhaps more practical aspect relates to people and staffing, and whether or not this new environment, and it is a new environment in Hong Kong, whether that's going to unsettle people, staff here in Hong Kong, and whether that's going to have an impact on the ability to recruit and indeed to retain good people in the short term. Until this is settled down, there's a lot of unknowns, if you like, about the law and how it's going to be applied, how it's going to be interpreted. So I think until there's some precedence, if you like, until there's a bit more certainty, there's inevitably going to be uncertainty around, which is not good for business. And as I say, will lead to a lot of the questioning probably around those two major areas.
Okay, great. Thank you, Stephen. The next question is also for you. It's for businesses looking for government support. What advice do you have related to applying for the employment job schemes or the government loans?
Well, the employment job schemes, I think, as I mentioned, is relatively straightforward. It's based on the number of people you've employed previously in recent months. There are some rules around that, and we can certainly help on that. It only applies, you're too late for the first phase, 3 months, which is 31st August. The next 3 months, September, October, November, I think the applications for that will open fairly soon. But as I say, it's based on your head count. It's based on the number of people who are enrolled in your mandatory provident fund, the MPF, the mandatory provident fund. And it's up to, well, for the next 3 months, it'll be up to 9,000 Hong Kong dollars per month per employee for a period of 3 months.
Okay, great.
Very happy to help if people want to know more. Oh, sorry, and with regard to loans, another financial aspects, the loan side, somewhat more complicated because there are different tiers of loans depending and different tiers of guarantee. There's 80%, 90%, and 100% guarantee, depending on how much you're looking to borrow, and then there are regulations around that as to whether you'd qualify, and indeed then what the banks would need to take into account. But it's fairly generous in that it applies, if I recall, I think it applies to businesses with less than or up to 50 employees. So by Hong Kong standards, that's for many businesses here that can apply. So it can be quite helpful. Again, if you need some more specifics on that, please feel free to contact me.
Okay, great. Thank you, Stephen. The next one is for Alice, and it says you mentioned some online resources for helping to submit electronically, the taxes electronically, I think. What are some of the common challenges that you see for people with the electronic submission?
You mean sorry, I didn't quite catch quite clearly. You mean I just now mentioned that the online Q&A between the taxpayers and the tax bureau, right?
Yes, yeah. I guess they're asking what are some of the common challenges that you've seen people having when they're submitting electronically?
You mean when they communicating with tax bureau?
Yeah.
Okay. I try to make the question. Yes, in China, I think the most the common challenges faced by the taxpayers, because in China we have a unified tax system. That means we do not have just like US, we do not have such a federal or a federal level or something, a state level. In China, we only have unified tax laws. But in practice, when we come across detail of specific tax questions, maybe the tax bureau in Shanghai and the tax bureau in Chongqing, they take different approach. They have different technical positions. For example, I'm helping clients dealing with M&A transactions. And actually for the SAT level, they have issue circulars and to addressing the technical points. But because some of the wordings may be a little bit vague idea or something. So the local tax bureau, they have different interpretations in practice because they have some, maybe internally they have some arguments. So when we have, for example, the client, they have headquarters in Beijing, a subsidiary in Chongqing, subsidiary in Shanghai, and then two different approaches. So this is, I think, the most challenging thing faced by taxpayers, not only resident enterprise, but also non-resident taxpayers. So how to solve the problems? I think maybe one piece of suggestion from my side is to first, we need to go to the basic laws. In China, we have basic corporate income tax laws, VAT regulations, individual income tax law. And we have to analyze the basic rules under the tax regime. And then we do need very thorough discussion with the tax bureau. Why? Because sometimes when tax bureau, their judgment cannot meet the taxpayer's expectation. Why? Because they do not understand the client's business. They do really understand what you are doing. So that makes them difficult for the tax authority to to make the final judgment. So when our clients normally face kind of such challenges, we normally suggest they have a very thorough discussion with tax bureau on the business models, to do a numerical analysis to present to the tax bureau to show that we have the transaction has substance. We have our commercial purposes, not just for ask for tax reduction or tax evasion only. Yeah. So these are my experience when helping clients dealing with those challenges. So Becky, these are my suggestions.
Yeah, thank you, Alice. And then the next one's to you too. It's for the Social Security measures. Are there any eligibility requirements that apply to these benefits that people should be aware of?
So the Social Security. So they're asking for what kind of government?
Yeah, like I think like the social contributions and the like the housing fund and things like
Housing
that.
fund.
Mhm.
Okay,
Like,
actually, for the
are
social
there,
contribution.
sorry. So yeah, the question is,
Sorry, you please.
yeah. So then the question is, are there any eligibility requirements that apply for these benefits?
Not really. Just just I mentioned, they have different policies. When some of granted to those small and medium sized, and those just like I mentioned, they have a small scale and low profits, and so they can enjoy its exemption. And for those large enterprises, especially those big, for example, like state-owned enterprises, and also some MNCs, multinational companies, they are large enterprises, so they can only apply for the half exemption. Yeah. Not total 100% exemption. Yeah.
Okay, wonderful. Okay, thank you. And then the last one I have here is for Terry. Can you speak more to the elements of manufacturing bankruptcy that you help with, and what do people need to consider if they're facing that decision?
Wow, that's not going to be a quick and easy question. But if you have a bankruptcy, if you're looking at closing down a company in China, of course you probably want to avoid court-appointed bankruptcy, and you want to go through closing down the entity yourself, because that will be much easier. You're not going to be under pressure from the court to actually close down. So you want to actually avoid bankruptcy, but organize your orderly close down. This is a big project. It takes between, really at best, 8 to 12 months, and could take more than that. Actually, unfortunately, we're having clients who are still in the process after 2 years. It really depends on how large your footprint is in terms of both physical assets, land, buildings, machinery, and so on. Also, employees, because you will have to terminate all these employees again in an orderly fashion and paying all the prescribed compensation. You also will have to deal with people who are unhappy with that. So that's a bit of negotiation. So basically, the process starts with a decision by the board to actually close down the operations. Then you have to announce this decision in newspapers to make sure your creditors are aware of what's going on and they can make their claims. You will set up a liquidation committee who will oversee the liquidation, and this liquidation committee will start selling the assets and paying the creditors one by one in a prescribed order, ensuring, of course, tax payments are done. And again, there's a tax audit at one point, which is the main sticking point in many of the cases we're seeing. So if there is such a closing down project, please make sure you ask your service provider. We are delighted to help, but be aware that it's a big project, and you just don't want to close the door of the factory and get a flight out. This is not the good thing to do. If you do that, you're going to end up on a blacklist. If you have other operations or assets in China, this is going to be potentially seized. So the advice is really to do it properly, orderly, have a proper liquidation, and that needs the support from a service provider.
Okay, thank you, Terry. I appreciate that. So that's all that we have time for today, folks. But if you have additional questions that didn't get answered, please send them in through the conference system. Also, if you're not watching this webinar live, you can post your questions on the comments of the webinar, and we will connect you to an individual who can help. We appreciate you all joining us today. I wanted to thank our presenters for coming on to help contribute to the series. Please take some time to fill out the evaluations, to give us some feedback. You should be able to find a link to these within your web browser. And we appreciate everyone's help in making a difference at a distance.